Hi everyone, today let's talk about Google's new quantum computer and their new breakthrough and what it could mean for Bitcoin. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So what does Google's quantum computer mean for Bitcoin and the rest of the world? You can see the computer uses qubits instead of bits to solve problems, meaning that it is much faster than today's computers. The new Willow chip can make quantum computers more powerful and scalable using qubits as they work together better and more quickly. And just to get into this a little bit deeper, so you can hopefully get a better understanding, normal computers use bits, which can either be in the 0 or 1 position, you can see that, versus the qubit, which can be 1 and 0 at the same time or anywhere in between, which allows computers to process things on a much more rapid rate because you have all of these different variables to work with. But what are the drawbacks? They say one big problem is when you have too many of them working together, they can be a little bit error prone due to the same benefits that you get from the qubit, meaning it can be anywhere at the same time, which seems to present a problem with them working together, which then leads into the scalability problem. It's very powerful when it works by itself, but how do you scale it? And that's what they're saying here, is that the new Willow chip allows this to happen easier and make far less mistakes. And then just to give you some perspective on the speed, they say it took 5 minutes to run this RCS calculation, something that would take a normal supercomputer a very, very long time to do, something obviously that is way longer than we have time to run. You can see the Willow is made up of 105 qubits, which apparently is less than IBM's, but the fact that they do work together in such a stable way does make it way ahead of its competition. And then the risk here for Bitcoin is because you have these miners that are running all of these calculations trying to mine the Bitcoins themselves. If you have a supercomputer or a quantum computer in this case that is extremely fast and can effectively take over the blockchain, that would give them some control over the blockchain itself. And that's what they're saying here. Quantum computers could eventually overpower regular mining machines, giving them control over the blockchain, which is not good. What exactly does all of that mean? I'm not 100% sure, but I do understand that it's probably not great for Bitcoin. Is this a near-term concern? Maybe not, but is it something that will happen in the future? I would say so. And then here it gets really quite technical. You can see Bitcoin uses a cartography lock, which is SHA-256, which apparently is not great when it comes to quantum computers, but they are effectively trying to replace it with something that is quantum resistant. They also have some other fail-safes built into the mining difficulty and adjustments. You can see the rehashing of the algorithm continues to accelerate, which would have to accelerate quite a bit to potentially compete with quantum computers, but in theory it could do it. And obviously, as you continue to mine, the blocks do get more and more complicated, which does reduce that mining rate. Overall, they say they think Bitcoin is going to be okay in the face of quantum computing, but I do think that this is an interesting opportunity for quantum and Google, and people are certainly buying into Google at a rapid rate with this most recent announcement. Moving over to fear and greed, we finished the week at a 50, slightly down from a 52. You can see this continues to trend down. A little bit of choppiness here over the last couple days, but my guess is this is probably going to go a little bit lower. Regular greed on momentum, again, sideways choppy, but still sitting very extended off of that 125 EMA. We have not seen a touch of that since back here in August. Before that, it was a long time, and since then, it's been a long time. Strength, still extreme fear. Breadth, extreme fear. So these continue to show weakness here. Put call ratio, still sitting at extremely low levels. This really should be an extreme greed, but it's staying regular greed for now. Volatility, still neutralized, starting to show a little bit of sideways choppy to slightly bullish movement. And then safe haven demand, regular greed, junk bonds, still regular greed. Overall, I think this is still showing definite weakness underneath the hood with strength and breadth, but momentum just has not faded quite yet. Moving over to the AAII survey, you can see basically sideways choppy here. So the bears were basically flat, neutral expanding slightly, bulls getting contraction just a little bit. But really this has been the same kind of price action we've seen on this survey over the last couple of weeks. And it's pretty much in line with historical averages. We did see a step down on bullishness, which is fair. Markets were selling off a little bit there, especially into the end of the week, showing some lower highs and lower lows. But is this going to start to trend down? We really haven't seen that quite yet. Moving over to seasonality, the Friday into the Monday is supposed to be the bottom of markets for seasonality, and then we're supposed to see Santa Claus rally into the end of the year. Are we going to see that Santa Claus rally, or are we going to continue to roll to the downside the way we've been seeing on the Thursday, Friday sessions? But definitely remains to be seen. If this goes bearish into the end of the year, that can be not so great as we head into the next year of trading. And then looking at the calendar, you can see it is quad witching week, so that's definitely going to be interesting. We have FOMC on the Wednesday, definitely a bearish week there on the indicators, tons of data, and then quad witching on the Friday, like I mentioned. So lots of stuff going on there. Santa Claus rally, is it going to start up the week after? Of course, you have short trading Tuesday, day off Wednesday, and then bullishness into the post Santa Claus rally time period. And then for that Friday, right before New Year's, typically a bearish day. Then moving over here to the economic calendar for the Monday, just U.S. manufacturing PMI, global services PMI, nothing crazy. Tuesday, retail sales, definitely going to be an interesting one. Previous number was 0.1 for the core month over month, headline number 0.4, expected to step up slightly to 0.5, we'll see. And then for the Wednesday, CPI for the Eurozone, not super worried about that. You got some interest rate projections, and then the FOMC statement, definitely going to be interesting. Current expectation is a 25 basis points cut. I still think that is going to happen. We'll see. They did say they were going to do 75 basis points of cuts, which we've already technically gotten, but we'll see. It's going to be interesting. Again, I still expect them to cut, but it is a little bit of a change of thesis based on what they said. And then looking at Thursday, you got GDP numbers, Philly Fed manufacturing, existing home sales, tons of data there. As we head into the Friday, where you get some PCE inflation data as well as Michigan data. So tons and tons of stuff on the calendar. Wouldn't shock me to see just a little bit of bearishness into some of this data just because of the uncertainty. Moving over to max pain for this quad witching, you can see total options a ton there, 4.86 million, almost 5 million options. Put call ratio quite low at 2.2. Huge call walls here at 605, 610, and 615. So wouldn't expect to get above those. This is definitely showing me some bearishness in my opinion. Put walls far smaller there at 600 and 595. Call walls in there a little bit as well, but nothing crazy. Honestly, I would expect to finish here between 595 and 600 if I had to put a number on it for the end of next week. But these call walls, absolutely massive, especially compared to what we're seeing on the bear side. The first put walls that I would argue would potentially hold up would be 580 and 575. So right now, this says markets could absolutely go lower, and fairly significantly so. Moving over to the charts, starting off with the weekly chart here for the SPX. You can see it was down a little bit over 0.5%, came down, touched that trend line, caught a little bit of a bounce. Momentum stepping to bearish. Haven't seen that for 3 weeks in a row. Big volume on that selling candle, especially considering how little it moved. Honestly, to me, this looks like we're probably going to see at least a little bit of a pullback in here. If the trend holds up, let's go ahead and extend that out. That trend is going to be basically sitting on current price. So if it's going to hold, it really needs to hold right where it is for the next candle. Otherwise, if it breaks down, we're looking at potentially another 1.5 to 1.6% down to that next trend support in there. And then the question is, what becomes of it after? Is it going to be more of a move like this where you get a fairly substantial pullback culminating in around 9 to 9.25%? If you did get a move like that top to bottom, 9% takes us all the way back here to the 55.44 level. Haven't been in that price action since back here in early September. So that would be a fairly substantial pullback. Obviously it was here, ended up bouncing from there, of course, but we haven't touched that 55-week moving average in a long time since back here in October of 23. It's been a very strong bounce from there. We've been talking about how this momentum continues to fade, and I do think that is still true. And then looking at it here on the daily chart, you have a high, lower high, 2 down candles in a row. Looks like this is going to push to that 21-day moving average down at 6,006. Momentum is bearish. RSI is bearish. We'll see how that plays out. Right now, it does look a little bit bearish. On the daily, you could argue maybe it closed below it, but really it is right on top of that trend line. And then looking at the SPY charts here, I added another level at the close from the 6 December candle. That gives you a 607.81 level. Right now, again, looks like sideways choppy, looks like resistance at that level, continues to sell. 21 EMA right at my level, 599.64. I think at the very least, we're going to go to here. Momentum bearish, RSI still bearish. You can see volume did ramp a little bit on that selling candle. So volume on the 2 selling candles before here on the Monday, Tuesday were also a little bit higher than the bull candle. So not indicators that you would want to see if you're trying to turn a little bit bullish. We've been sideways choppy in this region since 3 December, and we are still here on 13 December, so we'll see if it sells. My guess is that it will. And then moving over here to the Tasty charts, you can see that still slightly up candle, sitting basically on that second ATR band, which is at 602.26. That continues to be a very interesting level. We touched it on the wick low, momentum still slightly bullish. We haven't seen any kind of volume here, so continues to be basically grinding price action. Based on this candle, looks most like one of these where you do pull back at least to the 8, and then you see a kind of continuation from there. 8 EMA is sitting all the way down at 594.65, so that's a fairly substantial move from 604 to 594, about $10 of potential price action there, a little bit over 1%, just like we talked about 1.6%. So we'll see. And then looking at that daily chart, again, you can see we're right on top of the 8. It looks like we closed just barely below it, 604.46. Current price 604.27. So you close below the 8, right at that first ATR band, 603.95, just barely above that. And then the midline there is going to be 599.52. So pretty much in line with this high back here from mid-November and my level that I talked about on the previous charts. Momentum slightly bearish here again. And then you have that ATR band 596.58. So everything to me says at least a slight pullback to these kind of midline levels, 596, 599, somewhere in there. And then we'll see if we end up getting the bounce like this, pull back to the midline, continuation run, or is this going to be the topping pattern that we've been talking about for a while? The momentum seems to be fading. This topping pattern is also taking a little while. Looks kind of similar to this, to be honest, where you did actually get a fairly substantial pullback all the way down to that 55 EMA, which is currently sitting at 588.22. Is that going to happen? Maybe, maybe not. But for now, does look like sideways choppy to slightly bearish. Moving over to the NASDAQ here on the weekly chart, you can see we are continuing to grind at that trend line. Momentum is still bullish. It was up 0.73, and every bit of that was on the Friday candle, which was the gap up on the Broadcom earnings. If it wasn't for that, I'm not sure that we would have stayed positive. You also had Tesla that had an amazing week, driving a ton, pushing markets up, but everything else was not super great, super narrow on the breadth when it comes to the NASDAQ right now, and that's why we saw the rest of markets selling off, except for the NASDAQ. And right now it is at this trend resistance. If it continues to grind there, just like it did this week, that's where we're going to see 21,936, which really doesn't give you a ton of room from here. It's only about another 0.86% to the upside. Again, still looks good, continues to do it. Can it stay super narrow and continue to stay bullish? I guess we'll see. And then you can see that here on the daily chart, 0.76 on that Friday candle. All of the gains for the week were right there. Otherwise, we were going to be flat from the close on the Friday to the close here on Thursday was completely flat. And then all of that on that Friday candle. And then looking at my Q's chart in terms of levels, I put one here at 530.08. That was the high from that Wednesday candle. That's what I was looking at. And then 526.50 was the low from the Thursday candle and the high from that Friday candle. Realistically, this is a little bit narrow, but this is what I was watching. You can see that absolute doji completely flat on the Friday, except for the gap up. Momentum still bullish, but again, I think breadth might take this. How far? Who knows? But for now, market breadth is not helping out. And then moving over to the Qs here on the Tasty charts on the weekly, you can see we did touch that second ATR band and then started to push towards the upper band. If we do get that kind of culmination style move, that upper band is going to be at 543.92. That would be another $14 or so from here. Is that going to happen? Who knows? These last couple of pushes have taken us to that upper band. Seems possible, plausible that we could get up to that upper band. Again, that's about $14 or about 2.5%, maybe a little more, 2 3/4, somewhere in there. And then looking at that daily chart, you can see the upper band continues to be major resistance. We hit it here on the 11th, pulled back from there, hit it again on the Friday session, pulled back from there. So upper band continues to be your upper limit. Right now that's at 532.46. So again, maybe $2 of upside as this continues to grind higher. Still bullish conditions on the daily charts, of course. And I just wanted to highlight the bearish conditions that we're seeing on the short time frames because this is still sideways choppy markets, and it's the same on the SPY charts. Bearish conditions on those shortest time frames, despite the longer time frames still looking quite good. Moving over here to the Russell, you can see the medium term still very much an uptrend, but on the week it was down 2.45%. Momentum continues to step down here. As we push into the next week, you would expect this to continue to move in that direction, especially with the RSI breaking back below the SMA. It has been chopping kind of in this region for a while, and we've seen it chop on that SMA a few times, but generally that's not a super great indicator. So far, big down weeks in a row. Hasn't really happened since back here in April, but this is 2 in a row. We'll see if it ends up playing out that way. We get a third push down into the trend structure here. You also have VWAP sitting in there on the weekly chart right there at 227.73, and then the 21 EMA, which has acted as support a few times here before we kind of had this bigger push up on the first candle of November. That's sitting all the way down at 222.97. If we did get a continuation move into that range, that would be about another 4.3% lower. The volume hasn't been super great. The big volume we saw was on the up move. Since then, it's kind of been low volume, but potential for continuation if that 9 breaks, which is currently sitting at 231.42. And then looking at the daily chart a little bit closer, you can see this has been accelerating to the downside. It's been those 2 weeks in a row of downwards movement. All of these slightly positive candles have been inside candles, quickly followed by down moves following. Current support, 232.09. I ended up jumping into a small position there, waiting to see if this ends up holding or not. Otherwise, 55 EMA, pretty much in line with that trend, in line with my level there, 229.18. This is the zone I would be looking for if this breaks. From current level, that's about 1.75% lower from there. From the level, that's about 1.5%. So watching this one here, waiting to see if we get into that zone or not. Momentum, still very bearish. RSI, very bearish. And then looking at that daily volume, you can see it is ramping very slowly on these down candles. Again, the big up candle, the big volume was here from the 5th to the 6th. Since then, we haven't really seen any kind of volume spikes. And then looking at the Tasty charts here for the weekly, you can see that second ATR band has been the resistance on this most recent run. We got above it short term, pulled right back to it the next 2 weeks here, and then pulling back from it once again. That resistance right now is 243.33, pulled back right to that 8 EMA, which continues to hold. You can see we were in here for a while holding that level, and then we got the spike up. We're right back to it now at 232.79 on the weekly. That can be an important level. You can see we can grind along that level for a while, then you get the breakdown here, get back above it, hold that level for a little bit before breaking down again. Now we're here, waiting to see if we do get the continuation to the 21 down at 224.32. Again, pretty decent move there. That would be about $9 from here if we did get that move, pretty much the same as what we were looking at on the previous charts. And then that lowest ATR band on the daily chart, 225.99, basically 226, and then just below that you have the 89 EMA at 225.38. So that would be the zone short term that you would look for. If we did get a push to there, that would also put us into bearish conditions. Your current ATR trailing stop on the daily is 229.88. Momentum currently bearish, but still bullish conditions based on that trailing stop. Moving over to the Dow on the weekly, pretty bearish week, 1.74%, which is a pretty wide-ranging candle here for the Dow. The Dow's not a super volatile stock, and you can see big down move there, waiting to see what happens. Is it going to pull back to the trend? I would say that's most likely at this point. And that's currently sitting at 434.78 for next week. That would give you about another $5 of potential downside, a little bit less than what we saw this week. Momentum, bearish, RSI stepping down, volume starting to ramp a little bit on that selling candle. We've seen candles like this before. We end up pulling back to the 21 or the VWAP, and then we get a bounce from there. VWAP currently sitting at 431.31, so just below the level, just below the trend. If we do pull back and hold that level, you can certainly look for continuation. If it breaks from there, the 21 is your next level at 421.92. Again, everything on this says we should pull back at least a little bit more just because we didn't hit any of those key levels. Once we hit those key levels, then we can start to look for a turning point. But when you have 7 down candles in a row, you do have to respect that. That's definitely a trend for now. Waiting to see if we get into those critical levels. Last time we held the 21, this time we broke it. So that's a little bit of a bearish structure. We've seen it before where you pull back all the way to the 55 and then you see the bounce. Currently sitting pretty much in line with that level again, 432.78. So critical zone in here. This is likely where we're going. at least in the short term. Moving over to the equal weights just for a moment, 1.64% continues to look very similar to the Dow, except for the fact that we are below that 9 EMA at 182.44, closing price 182.16, so right below that 8 EMA. VWAP is your next support there, 181.21, currently sitting just below my 182.22 level as well, so did technically close below it, but it's very, very close. You could argue that is right on the level there. Otherwise, momentum RSI, like I said, bearish, VWAP next support. If that structure breaks here, then you should be looking for the 21-week moving average down here at 177.44, in line with my level 177.25. Obviously, it'll step up here just slightly into next week, but if this structure breaks, I do think there's a fair amount of potential downside there that would bring you about 2 2/3, maybe 2 3/4%. So we'll see. I think this is probably the zone where we head to over the next week to 2 weeks. Moving over to some ratios, SPY Russell and NASDAQ SPY, you can see the SPY Russell did push up, so the SPY is outperforming. Obviously, the Russell was pretty rough on the week, down around 2.5%, so not super great there. Pushing towards the level, 259. We'll see if it can get above that level or not. If it does, your trend resistance is going to be 263. Momentum swinging to bullish, RSI swinging to bullish. So we thought we might find resistance in here, ended up pushing right through it. So Russell not doing so great there. And then looking at the NASDAQ SPY here, you can see huge outperformance last week and this week, continuation to the level, continuation breakout, NASDAQ being the top performer by far, and I would guess that's going to continue here. We've seen big pushes to this level here, probably need to add one realistically at that 367. I think that's your all-time high. Yep, that's the all-time high on this indicator, so right in here. So I added that level there, 366, right at the high from the 1 July candle. That's the high for this ratio. At this point, you have a pretty decent consolidation low, clean breakout here, probably headed to that level. Moving over to the SPY divided by the M2 money supply, you can see we've been on this very clean trajectory. The range of this trend continues to contract. You can see how wide the range was here early in the trend, going back to October of 22, really choppy, big swings up and down. And since then, these pullbacks have been really, really muted, slowly grinding higher. We're at that key level. We pulled back from it slightly here. 28.55 was the level we touched yesterday, and that takes you all the way back here to that .com time frame. You can see that is the level we've been watching. Marks multiple bottoms in here. Wicks to the level, bottom, bottom, bottom. Continues to be an important level again. You can also see we're right at the highs here from July of 1998. So this is the kind of price range we're in on this ratio. Super critical, super bubble territory in my opinion, but that's where we're at. We'll see if it rejects from this level or if it goes to the all-time high for this ratio. Again, understand we have not really maintained above a 22 on this ratio for any length of time. We've come to that level. It's been key resistance many, many times. Anytime you really buy below that level between 15 and 19, 15 and 18, somewhere in here seems to be a very good time to buy. But anytime you buy above that 22 level, that's usually not super great when it comes to the medium term, even the long term. We've talked about it many times, but that's where we are. Are we going to see a significant pullback? I think we probably will. And then moving over to some individual stocks, just wanted to talk Micron here for a second. This got brought to my attention, and it does look like a really solid setup here. So you have this very long-term trend. This is the weekly chart, marks many bottoms here before you had the big move up. Pulled back right to that trend, overthrew it just a little bit, and then over the last 5 weeks, we've basically been on that trend line as this higher low setup. And then you can see top here continues to be interesting. In fact, you can really extend this out just a little bit, basically to that here. Marks these kind of consolidation tops. Top here, we did overthrow it to the level there at 114.30, which is the high from that candle, and the low from the close here on the 15 July candle. But we've been in this trading range. It continues to hold these higher lows. It's really getting to the peak of this triangle. It's going to give you a break one way or the other. If I had to say, I would probably say this is going to be bullish. You can see the RSI here continuing to hold those tests of the SMA, probably going to get an upswing. I do like this setup at least to the 114 level. So from current price, that would give you about a 11.5% move from there. And then obviously if we broke out, then you could potentially be looking to those highs, which would be absolutely massive, somewhere between 36 to all the way up to maybe 50, 52% to the wick highs, all the way up there in the 157 area. So something to consider in here. Looks like a very solid setup. Want to see the breakout, retest continuation, but for now, it's in the range. Does look a little bit bullish to me. Moving over to Apple and Microsoft. Apple continues to go straight up for 4 weeks in a row. One slightly pullback candle and then another up week before that. So really 6 weeks in a row pretty much of bullishness. All-time highs, everything continues to look massive here for Apple. In terms of structure, let's see if we can find anything. The only thing I can really find that I had on my charts before was the trend line that I have marking this high here from July, which doesn't give you any kind of overhead resistance up until that 268 area. Really, this just looks like a technical breakout. There's nothing really catalyzing this in my opinion, not that I'm aware of anyway. Just looks like a strong breakout, strong technical breakout, and really I think this is a flee to quality. Apple is being viewed as a safe investment right now, and people are trying to move out of those riskier stocks, at least in my opinion. And then looking at Microsoft, we talked about the breakout last week. Strong move there, took out these levels, held the level this week, touched the next one and rejected, closed below the midline of that kind of consolidation range here. Momentum still bullish, RSI still bullish, so we'll see if Microsoft has a little bit more in it. Both of these stocks have really done quite well, especially for a week where the SPY was negative and the NASDAQ was only up about 0.75 or so. So Microsoft did outperform this week. Next resistance, we did touch it, 453.30. See if we can get above it and push back to those all-time highs or not. Moving over to Tesla and NVIDIA. Tesla having a massive week, 12% all-time highs, closed on the high, momentum super bullish, still super overbought, but continues to be a straight rocket ship. In terms of trends, I don't have anything until this trend out here. We can go ahead and extend that out just to give you something to work with. It's always hard when you're at all-time highs in price discovery, but this is what I got. It's all the way up here in the 580 area, seems out of reach, but who knew we'd be back in the 400s after being in the 150s just a couple of months ago. So it's been a strong move. Can it continue? Seems likely considering how this closed and how strong it was over the last 2 weeks. And then looking at NVIDIA down about almost 6% on the week. We've been talking about this as a topping pattern. Really, we've gotten that breakdown now. So we closed below all of these candles going back to that 14 October week. It's right at VWAP right now, which is at 133.88. We closed at 134.25. So right in here seems like an interesting area. We'll see if it closes below VWAP next week. And then you have 130.35 is my next level. That takes you back to the highs here, as well as the end of August kind of topping pattern. So interesting level there. And then 21 EMA is your next one at 127.57. Momentum bearish, RSI bearish. If NVIDIA continues to roll to the downside, that's obviously going to be bearish for markets. And I think part of this is being driven by the breakthrough technology from Google. If they can get those quantum chips scalable and in mass production, that's obviously going to be a huge competition for NVIDIA, especially in the AI race. Right now, they really don't have any. And if some of that competition starts to get priced in, NVIDIA is going to pull back pretty dramatically, in my opinion. Moving over to Amazon and Alphabet, you can see Amazon sideways choppy, doji candle at the all-time highs, slightly positive, momentum bullish, obviously overbought. We'll see if it does kind of doji and then pull back off of that indecision candle. And then Google, huge week off of their quantum chip that we just talked about. In the opener, you can see 193.31 is the all-time high. We did break that just by a little bit with the wick high. 197.89 is your new wick high, but we did not close above the all-time high. That is still back here. On the 1 July candle is your all-time close, which is at 191.96. So we did close below that. I'm working off of the wick high from the next week as the previous actual all-time high, but like I said, we took that out now. Trend resistance up here around that 200, 201 area. Momentum still bullish, huge volume, not quite overbought yet. My guess is that we probably push into that zone, and then we'll see what happens after that. Obviously super bullish on the week at 8.44%. Then moving over here to Meta and Broadcom, you have Meta going slightly negative on the week, 0.5% or so. Trend resistance up here at 688. It did close above that 602 all-time high. Going back to that 7 October week after pulling back slightly and then continuation, Meta continues to look very, very good. And then I wanted to bring up Broadcom this week because it did have earnings, and this is really what held up markets, in my opinion, at least into the after hours Thursday and Friday sessions. Huge push on the week, 25.2%. And the vast majority of that was on the Thursday into Friday off of their earnings. So big volume, big momentum, overbought conditions now, obviously all-time highs here. Broke all of the trend structures, at least that I had. And I did go ahead and add a trend line here. Same trajectory as these other two, but added it to the high from that 11 June candle just to give you something to work with here. That would give you some resistance in the 245.68 area. Moving over to staples and discretionaries, you got staples down 0.4%, continuing to hold some critical support in there. VWAP got touched this week, 81.79, and then ended up getting a little bit of a bounce, touched the level 81.85. Still holding those levels. Momentum bearish, RSI still bearish. We'll see. Still looks like a bit of a bull flag on the short time frames, but in the medium, looks like a lower high setup, waiting to see what happens here. 21 and 9 EMAs sitting at that 81.50 area. And I would like to see that touched and held before we see if we get that kind of continuation or not. And then looking at discretionaries, very slightly positive. We had this super long-term trend, ended up getting above that and holding. Momentum super bullish, RSI super overbought, but continues to go, getting driven higher by Tesla. And then moving over to utilities and transports, really I just wanted to show some things outside of the tech sphere because they're really not doing super great. So you can see big down weeks, nearly 4% and then 2.5% on utilities, back below my 77.96 level after getting to all-time highs here, breaking back below all the short-term EMAs, momentum bearish, RSI bearish, and then you got transports also doing bearish things here, 4% and then another 2% lower, momentum bearish, RSI bearish. Seems like everything besides tech and even semis really has shown some bearishness over the most recent couple of weeks. It's really just the Mag 7, those biggest stocks in the world, that continue to outperform massively, holding up the NASDAQ and allowing the SPY to outperform versus the Russell and the Dow. So just understand there's absolutely weakness underneath the hood, and it is big tech that continues to stay very strong, if not going higher. Moving over to 20 and 50-day breadth, you can see on the 20-day, we did get a big move down, 36% on the week, right to the level 28.21. We'll see if that ends up being a critical level or not. We've seen many times where this 20-day breadth comes into this zone, hovers for a little while sometimes you get a touch and then an immediate bounce. Last couple times we've kind of gotten really quick bounces, but we're here again waiting to see if this is going to be a critical level or if it's going to push back down to the 16 area. Breadth is very, very weak right now in markets. At least the Russell and the Dow have gone with it. SPY just started really, and then looking at 50-day, big down move there as well, almost 19% right to this trend line here that we've been watching. Close below it, classic setup on the RSI, breakdown, retest, breakdown. Usually you would expect a slightly lower low from there, at least to the 40 level. That's been a critical level before in here. We'll see if that continues to be interesting or if it pushes into the 32 area. Right now for me, it looks like breadth is going to go lower, even though it is at these critical zones of support, at least in my opinion. Moving over to 200-day breadth. We talked about it briefly midweek, but this has been a big breakdown. This is a close on a low that we haven't seen since back here in July. We'll see if this ends up being critical level. 64.74 is mine. Technically, it closed below it just barely by about a tenth. And then looking at momentum, bearish, RSI bearish, probably going to head down to the 200, which has actually been trending lower here over the last couple of weeks. You can also argue high, lower high, touch the level, rejected, 2 big bear weeks in a row. Again, breadth continues to show weakness in my opinion. We're back into this range after overthrowing it here for a little bit. If it pulls back to the trend support, that's all the way down to this 56 area, 55 area. Once it gets here, 144 EMA is your next dynamic support if that 200 breaks, and that's all the way down in the 54.92 area. 54.69 is my level. So in here, that's probably the critical zone right now. Momentum bearish, RSI bearish, waiting to see if we get a breakdown from this very, very long consolidation. Moving over to yields just for a moment. I've kind of been off of talking about these, but we did have a big up week today off of the PPI data. CPI held firm, PPI gave it a big jump. As we head into the FOMC week, I just don't see this 2-year staying this high. I think it'll probably sell off this week once we get the new information from the Fed, especially once we get that cut down to 4.5. This should continue to roll down. I do expect yields to be lower within 2 years from now. I think we'll get some cuts next year. Maybe they lighten up on the cuts a little bit, but either way, I think we'll get some in 2025, which should give this a little bit lower trajectory back into this maybe 3.6, 3 3/4 area down here. Momentum has been fading, but it's still holding up fairly decent. And then the 10-year, I think we can probably stay in this region. 4.5 to 5 range makes sense to me for that longer duration. We'll see. Momentum back to bullish. RSI, classic setup here. Breakout, retest, breakout. Looking for that higher high. Probably going to go a little bit higher. I think the 10-year is in a good range. If it gets too much higher than 4.5, probably not going to stay there for too long. Certainly not up to that 5 area in my opinion, but looks very strong here. And this is probably what's giving equities a little bit of a hard time into the end of the week. Moving over to the dollar, interesting candle here. Strong candle, about 1% or so. Got above my level, 106.84. You can see this is the consolidation high from back here, mid-October of 23. We're back into that zone, waiting to see if we can hold that level, continue up to 108 or not. If you're above 106.84, that's a bullish hold. If it breaks back down from there, probably headed to 105.5 and potentially back into this kind of consolidation range, 104.4. Right now, RSI divergence makes sense. You have a peak RSI, lower pricing, lower RSI. I would expect it to break down a little bit. Obviously, this is going to be dictated by what we get from the FOMC. If FOMC says less cuts, that's going to be strong for the dollar. If they say more cuts, that's going to be weak for the dollar. So we'll see. Definitely going to be interesting with all the data and FOMC this week. Moving over to bonds. Bonds did brace for a potential for less rate cuts next year. Big bear candles on both of these. Momentum back to bearish on both of these. Similar setups on the RSI. Breakdown, retest, breakdown on both of them. Looks even worse here on TLT with the breakout briefly and then break back down. So markets giving you that head fake. Usually that means some lower lows to come, but for now, looks okay at this previous low. Couldn't quite get to that 21 EMA. Would have wanted to see it at least get to the level. The fact that it didn't is quite bearish. Again, medium to long term, I think this is a buying opportunity. TLT is in that kind of 4.5 to 5% range, similar to what we're seeing on the 10-year in terms of yields. But right now it does look quite bearish with nearly 4.5% lower momentum in RSI and volume. Everything's saying this is probably going to go at least a little bit lower. Moving over to volatility, you can see volatility was positive on the week. Inside candles, step to bullish on momentum. RSI not showing it quite yet. I think we'll probably get at least a little bit of a rally here into the FOMC, just out of the amount of data and the FOMC coming. Usually get at least a little bit of volatility out of that. How much higher we go remains to be seen. Maybe if the FOMC does a rug pull, which I do not think they will, then we'll obviously see some spikes. I do think it'll go a little bit higher just on price action. The overall indices do look weak. Breadth looks very, very weak, especially with that 200 days starting to show some fairly significant weakness that we haven't seen in about a year at least. So this should see at least a little bit of spikes. You can absolutely hold in this area for a while, maybe just a little bit of a spike to the level and then pull back, but the step to bullish does give you something. We'll see how it plays out next week. Moving over to my accounts, I'm super frustrated. I ended up losing like $100 on the week, which is a bummer. I was up going into the Friday, and I really should have been in good position for the Friday, but I just fumbled the bag at the last minute, which is a bummer. Otherwise, I guess it's not terrible with the Russell being down about 2.5% and the SPY being down about 0.5% and then losing only $100. But the NASDAQ was positive, and that's usually what I reference off of. So bummer there. Otherwise, not terrible, I guess. In terms of positions, 232 put, slight profit there for the Monday, and then Qs all the way out to the Friday of next week at 520, bracing for some bearishness, really limiting my upside though. You can see $10.37 max profit would be 530.37 on the stock price, so not a huge amount of gains potential there. Really just 30 to 40 bucks with a fair amount of risk. So we'll see. Right now, not super bullish, playing some defense into next week. Let me know down in the comment section what you think of the new Google chip. What do you think of markets? Is Breadth finally going to pull down markets, or will the Mag 7 continue to prop them up? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.